bridge the gap between being an emerging artist and being a professional artist. And I think for me, what that really looks like is just being able to have the right networks, the right opportunities, and access to some of those opportunities. Access is really important. So kudos to you for being here today and taking the time to bet on and invest in yourself. And I hope that as you invest in yourself here, that you'll have the opportunity to learn how to invest in your financial situation from Shay a little bit later today. So today's panel is called Secure the Bag. And we wanted to take this opportunity, especially given the fact that we're almost 2 years into a pandemic. Some of us as artists are not able to perform on stages, not able to do certain things that once brought us a lucrative income. And so we as a team, as a collective, wanted to take the opportunity to have this first panel to teach you a little bit more about financial management, understanding the different ways in which you can manage and understand your finances. And then from there, later on at 3 o'clock, we're going to be having our final panel, our final event of the Edutainment Summit, which is the grant writing workshop. And the grant writing workshop is something that I'm really, really excited for you all to be a part of. So of course, this panel is going from 12 to 2 p.m. We're gonna have a little break from 2 to 3, and then at 3 p.m. on this very same link on Zoom, or for those of you on YouTube, can join there. And those of you on Facebook can also join us there as well. Yeah, with that being said, I guess I just wanted to share a couple of things. I want to first say thank you to Lush. Lush was the generous sponsor that helped put this event together. And we were able, this is our first kind of major sponsorship, which is really, really amazing. So thank you, Lush, for putting this together. I want to take the time to thank everybody that's been involved and a part of the Edutainment Summit. Thank you to the lead, Anastasia, for putting it together, for managing this incredible event. Despite the fact that it was online, there's still so many components that, have to go into these things. And what you're seeing here today, you can't even fathom the amount of work that has gone behind the scenes. Like, anyways, it's a very interesting thing to be here and see the fruits of our labor. But with that being said, we're going to start this panel. This panel is going to be curated, or sorry, not curated, but facilitated by someone who's really, really like a dope person. I had the chance to meet her through her her attendance on a Monday night. I'd see her just sitting there quietly in the corner, just listening to some of the performances, looking all cute and whatnot. And all of a sudden through the pandemic, I'd be seeing, Shay be doing finance for the culture. It's a really, really beautiful thing to see. And I think it's an important thing to see, because when you have the opportunity to learn something, especially about finances or whatever skill or knowledge you have, I think it's really important to share. So I'm really grateful to have Shay here today. Shay Myers is a licensed financial advisor, a youth mentor, and a gem dropper based in Toronto. She drops a lot of gems. If you're not following her on Instagram, please go find her on Instagram. You'll learn a lot about the work that she's been doing. She created Finance for the Culture as an educational platform to bridge the gap between finance and marginalized communities through education, empowerment, and humor. Shay went from having $200 to her name to multiple 5-figure funds in under 2 years after learning how money works. She has mentored over 100 clients and hosted over 30 financial literacy workshops, including partnering with U of T and Manifesto Toronto. Okay, Shay, come on, Shay. Shay offers one-on-one appointments to help clients shift their money mindset, approve their spending habits, understand insurance, invest, and build wealth. You can find her on Instagram at Finance for the Culture. Before we bring Shay on real quickly, I just wanted to say, because this was sponsored by Lush, we're hoping to continue doing this. And if not getting more sponsorship from Lush, hopefully getting sponsorship from other corporations to keep this going. That's why we're able to make this free for you today. And so we're gonna have a poll just a little bit afterwards. And one thing I wanna ask you is, when you see the poll, if you're on your phone, on your mobile device, you're gonna see a green bar. If you click that green bar, once we mention the poll is coming up, the green bar will pull up and you'll see the questions. We ask that you respond to the questions to the best of your ability. It helps us continue to secure our bag to give you free workshops like this. So thank you for doing the poll in advance. The other thing I want to mention is Shay has sectioned her workshop, and it's going to be sectioned based on different topics that she's going to be discussing, such as life insurance, which I know she's going to get into. And after each section, you will have the opportunity to ask questions. So the first thing I want to say, one thing I really love about how Shay is kind of crafting her presentation today is we're not going to wait to the very end where you can have your questions answered. You can actually ask your questions throughout the workshop. And so after each section, just gather your questions. What I will do myself, and I think somebody else on the team, forgive me, I forget who, will be gathering some questions and facilitating that over to Shay. So get your questions ready, but without any further ado, I want to welcome Shay to the screen.
Wow, humble, thank you. Amazing introduction. I don't even have the words. Shout out to R.I.S E. You know, I've been at R.I.S E for a minute, attending the events, and hopefully something that you get from me and my Instagram and my brand, Finance for the Culture, is community. So thank you once again for having me. I am humbled. And I will say, I'm a little nervous. And I heard a quote a couple years ago that said, if you get nervous, it means that you are deeply passionate about what you're about to do. So send your heart, send your love. I've been doing this for a year now. And yes, I still get nervous. So just to solidify the fact that I am just like you and I'm human, again, thank you so much. I'm so excited. I will say this, you are going to learn a lot. Like, there's so much information coming your way. So please take notes. Please write down your questions and just be open-minded to the information that you're going to receive. I want to emphasize that you do not need to have it all together today at the end of this workshop. This is just the beginning, or maybe it's not the beginning of you learning about finance, but I'm going to say try not to feel overwhelmed by the information. You can ask me your questions. I always encourage doing additional research as well. So again, thank you. I'm gonna get into it. The introduction was so great. I feel like I don't even have to say anything else about myself, but let me know if you all can see my screen. Sorry, does someone mind getting off mute and letting me know that they can see this?
Yes.
Perfect. Okay, secure the bag. You already know what it is. We are going to talk about building healthy financial habits. I'm going to talk about money mindsets, budgeting, saving, life insurance, credit and debt, emergency fund, investing. It's going to be intense, but please catch the gems because this is going to change your life. The things I've been learning in the past year. Side note, by the way, next month is going to be 1 year that I started Finance for the Culture. Can I get like a beep, 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 or like something? I can't believe a year has gone by. Like, and this is what I want to say. Listen, time can be your enemy or your friend. Okay, time is flying. So if you have a dream, if you have something you want to do, if you want to learn something, start now. It's been a year already. That's crazy to me. So if you've been wanting to start something, please take this as your sign. Sparkle, 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 to do it now, okay? So just to repeat here, Finance for the Culture is an educational platform. I have an online financial services business, and I bridge the gap between finance and community. And I do that through educating people about finance. I empower people through motivational speaking. And if anyone has seen my reels on Instagram, you know that I have a little bit of a, funny side. My mission is to make finance accessible by sharing information in a language that makes sense. And I encourage people to unlearn the scarcity mindset and remind them that wealth isn't exclusive. This is super important. I'm going to get into this a little bit later. So just quickly, here's some of the things that I do. I am a licensed financial advisor specializing in insurance, investments, banking, saving, all that fun stuff. I host financial literacy workshops like this one. I also do one-on-one financial analysis appointments, all of that stuff. If you want to work with me, hit me up on Instagram, email me, or book an appointment. The financial analysis appointments are free 99. I'm trying to make this as accessible as possible. When it comes to marginalized communities, a lot of the time, sometimes things are barred from us, right? So take advantage of free information, free financial guidance, and a non-judgmental environment that I provide. So just continuing on from that, I'm an independent contractor, meaning I do not work for a bank. I work for myself, but I have partnerships with different investments and insurance products. So I'm a one-stop shop. Different areas, you know, it's hard when you have different people working on your different areas in your life. When you have one person and they know everything, everything runs smoothly. So when it comes to finance, these are some of the areas that you want to consider, right? A lot of the times people think that finance is just investing or just about how much money they can earn and how much money they can save. I really bring a holistic approach to like your whole financial scope. And these are some of the things that we are going to touch on today. But just keep in mind, right? You need to focus on all the areas so that your financial health is complete. It doesn't make sense to start putting in windows if you haven't even built the foundation, right? So just keep this in mind. Okay, just a little bit of disclaimer here. This information is for educational purposes only, for specific solutions to your specific situation. I do encourage you to connect with me afterwards. I've studied, I've done exams, I have my license, I'm using this experience and my experience working with mentors and clients to provide you with this information. But I always recommend doing additional research for your due diligence. And I also want to say results aren't guaranteed. All right, let's get into it. So money is everywhere. Despite how we've been made to feel in these last couple of years due to the pandemic, money is everywhere. You see people starting side hustles, you know, braiding hair, being able to build businesses from their basements. Even though there are people who don't have the money, you will always find people who have the money and want to pay you. So I want us to really start up here, right, with the money mindset and stop thinking that there's a lack, right? They literally can print money. First of all, that's another conversation for another day, but wealth is not exclusive. You are allowed to have it. Okay, I want to repeat that. Wealth is not exclusive. They want you to feel that way so that you don't strive for it. So it's a lot about unlearning all of the things that we've, you know, grown up on, things that have been passed down from generations and generations of our families, of our friends, of, you know, media influence, right? It's so important to realize that if you want something, you can literally get it. Mindset and then implementation is going to get you what you want. Now, I want to acknowledge the fact that there is a systemic problem, capitalism, greed, people in power, all of those things exist. I definitely acknowledge that. But I want us to take back control and understand that we actually have an ability to change our financial situation. So I'm gonna go back for a quick second before I get into that. Your mind has to arrive at the destination before your pockets do. Truly, truly, truly. I can sit here and tell you everything, and I'm going to tell you everything when it comes to finance, right? But if you don't decide that you're going to change your habits, you're going to implement different behaviors, it doesn't matter what I say, right? So a lot of times when people think, oh, we're gonna talk about money, she's gonna talk about how to get a bag. Yes, but it starts here. And I don't know, this might sound corny, but the head is at the top for a reason. We got to start here and then we go down. Okay. So please, please, please focus on changing your mindset about money before you focus on getting the money. Hopefully that made sense. Drop some gems if that made sense. So I want to share this because I feel like this is a little bit of a wake-up call, a huge reality check. This is a screenshot from an article that I found online. And as you can see, the date was a couple weeks ago, right? So roughly half of Canadians financially insecure as debt confidence hits record low. This next part here says, nearly half reported they are just $200 or less away from not being able to meet their financial obligations. Now take this in, Because when I was reading that, I was like, 2 years ago, I swear I read the same thing. So this article now from October 2019, the same exact thing. Nearly half of Canadians are $200 or less away from financial insolvency. Like, come off mute, drop in the chat. How do you feel about this? Nearly 2 years later, the same exact position. How does that make you feel seeing these numbers and seeing this report or these reports? And why do you think that people are still in the same situation? Minus the pandemic, like other than the pandemic, how are people still in the same situation? What do you guys think? If y'all don't mind coming off mute. I see someone says that we'll always be stuck. So does anybody have an inkling of an idea of how people could still be in the same situation 2 years later?
Their mindset hasn't changed about money.
Right, mindset hasn't changed.
Yeah, I feel like their habits are still the same. So they're spending the same way. And even if they get like a pay increase or something, it's still same habits.
Mm-hmm. And I'll throw out something too. I'm sure y'all know about the whole minimum wage situation. It went up to 14 or 14.25, and we were promised it was going to go up to 15. And so regardless of what it is, right now, it's still not comparable to what we need to make to actually live comfortably in Toronto. So if the cost of living and inflation have increased in the last 2 years, but how much we're making hasn't, the math ain't mathing, right? So I just want you all to think about this, and hopefully this is a bit of motivation to really put your mind towards learning what you have to do to improve your finances, because time does not stop. The cost of living is probably never going to increase, and we really have to find ways to more than just survive. I don't like saying just doing what we have to do to survive. No. I want to thrive. Okay, so again, going back to mindset, super important. So some major keys. You do not have to be rich to invest. You can use other people's money to buy assets that make you money. Despite what other people say, you're likely to outlive your parents. So financial independence is key. Sorry to break it to you, but the government won't save you. If someone controls when and how much you get paid, they control your livelihood. This might hurt to hear, but it's true. Not everybody, of course, is in the position to become an entrepreneur, business owner right now, but that should be the end goal, because as soon as you have to clock in somewhere, as soon as someone is responsible for determining your worth and whether you should get a raise or not, they control your livelihood. And last but not least, saving money alone won't build wealth. We're going to get into why your savings account is the enemy. So sit tight, y'all. Okay, so this is something maybe you've heard me say multiple times, but this is the beginning. After we talk about mindset, this is the beginning, knowing your numbers. I have worked with over 130 clients in the last year, and most of them, I want to say 90% of them, didn't know what their monthly expenses were, didn't even really know what their income was after taxes, had no idea the amounts of debt that they had, what the minimum payment was, what the interest rate was. You know, they were investing through work, didn't have any idea how much per paycheck was coming out, you know, paying for insurance, don't really know what kind of insurance they have. So this is super critical. You need to know these details about your finances, just like we know how many kids Cardi B has, and we know, you know, so-and-so's newest car purchase. Y'all need to know these details because this is going to help build your financial plan. This is going to help you pay off debt properly. This is going to help you determine whether you need to make more income, right? This is going to determine whether, you know, if you're not investing at all, where you need to start putting your money. You need to know your numbers. I'm also going to say side hustle as well. If you're making additional income from a side hustle or a part-time job, you should really know what that is every month so we can allocate that to various things. So if you haven't already, and I'm pretty sure this is the next slide, activity number 1, we're going to give y'all a couple of minutes. Just as a starter, when you leave this Zoom, you can write down the amounts if you don't know them offhand, because a lot of people don't know what they're paying for their things, right? I know exactly how much my phone bill is, $67.80. Okay, and if they charge me more, I know, right? This is so key. When you don't know your numbers, companies can overcharge you and you won't know. Right? And this is a part of where that money is going. When we don't know where our money is going, well, maybe you got overcharged twice over here, right? Or maybe you even missed a payment over here. So write down all of your monthly expenses that pertain to you. Not everything is gonna, you know, relate to you, but write down everything that you pay for in a month. And the goal is what we want to do, and this is something that I do with my clients in our financial analysis appointments, is we take the income and all of these expenses here and debt get subtracted from that income. So we are left with a number at the end of the month that represents your disposable income. Out of the 100, it's over 130 clients now, but out of those many clients, I want to say there were only like 3 or 4 that were in the negatives every month. That means that everybody else has money at the end of the month. They should have money at the end of the month. And when I ask, okay, so where it at though? Like, where is it? They have no idea. So please, disclaimer, before you say that you're broke, before you feel like you can't do things because of money, do this exercise, figure out what your disposable income is and see if the 2 numbers make sense. What's the number that you should have at the end of every month? And if you don't have that, where is it going, right? Just take a peek here. Oh yes, I'm just seeing this message for sure. If people want to unmute and ask questions, that's totally fine. I guess I'll pause here. If anybody wants to ask a question about what I've said so far, feel free. And if not, I'll move on to the next slide. Drop some gems if you are all getting it so far, if this is all making sense, if you feel good, if you're learning. Okay, so reducing expenses is one of the ways you can increase the cash flow that you have at the end of every month. right? So I want to really iterate here. I don't want you to feel like you can't have fun in order to save. That's not what this is. I'm all about balance. If you've ever done an appointment with me, you understand that I'm all about balance. But what I want you to do is prioritize your needs, right? There are so many ways you can reduce expenses. Like, we pay for the most random stuff and we can really cut that back. So outside food and Uber, top two. When I first started my financial journey, I cut these out for about 6 months and I was able to save $10,000. Once I saved that $10,000, I was like, oh, hell no, there's no way I am ever going back to being broke. And to this day, I still order food, I still Uber, but it's not nearly to the amount that I used to, because I realized that that is a lot of money. That's way too much money. $10,000, I could literally invest in real estate with that, which I actually ended up doing, right? If you have debt, you can literally pay off credit card after credit card with that. You could put that towards your student debt, right? If you had a bunch of friends that all had money as well, you can utilize group economics and start investing together. I want y'all to think like that, right? Because it's not just the lunch today. It's not just the coffee this morning. It's doing that every single day for the next 60 years. And you're going to wake up thinking like, where did my money go? And how could my life have been if I would have just cut back a little bit? Alcohol. Listen, we all know the pre-drinking is the vibe. Water bottles. You will always see me with a water bottle. I'm always bringing water. I don't like to pay for water. The fact that water costs money is weird to me, but whatever. Random items. Listen, just because it's cheap doesn't mean you need it. I'm so specific when I go to the dollar store. Like, this is what I came here for. Get in, get out, right? Dollar store, Walmart, super dangerous. Online shopping, shipping fees. I don't like paying for shipping, and I will only do it if I really want something. It's like, local business, Black owned business. I'm like, okay, okay, I'll do it. But if I really don't have to, if I can get that shipping for free, I'm doing it. Buying multiple of the same item. You don't need the same shirt in 10 different colors, period. Late fees, credit cards. Listen, that's just irresponsibility, right? Like, it is, you basically signed a contract saying that you're going to make the payment on a specific day. And if you don't make it, you're getting a late fee. I used to be a debt, story time. I used to be a debt collector, and no, I wasn't mean. I was actually really nice. I was a debt collector, and these people would buy one item, and their bill would rack up to like $3,000. Late fee after late fee after late fee after late fee. These late fees are like, what, $25? That's crazy. 25 times 4, come on now. And last but not least, parking tickets. So just think to yourself of how much money you've wasted on things that you didn't need, and use that as fuel to now come up with budgets so that you don't continue the cycle of lack, scarcity, and brokenness. Okie dokes. So another activity, if you haven't done this already, AKA look at your bank statements. This is something that you need to be reviewing at least monthly. Listen, ignorance is only bliss until you ain't got no money. So doing this on a monthly basis is pretty standard. What I'd love for y'all to do is go and review your January bank statement. So go through the transactions, just scroll and see what is coming up the most. Is it Uber? Is it Uber Eats? Maybe it's credit card payments. Maybe it's online shopping, maybe it's parking tickets. I want you all to really evaluate your current financial situation, because you need to acknowledge that there's room for improvement before we get to the situation. We cannot, or sorry, the solution. We can't come up with solutions out of thin air, right? We need to acknowledge the spending habits that we have now so that we can change them and improve them. So go through your January bank statement. Everyone's always like, oh my God, like, I don't want to look, I don't want to look. But the thing about it is if you never look, you'll never know. And when it comes to your finances, like, you can't afford, literally can't afford to not know what is happening. So if you are comfortable, I'd love for a few of you to drop in the chat, what is coming up the most? What came up the most for your January bank statement? Don't be shy. Let me know what came up the most. Is it Uber? Is it Uber Eats? Are you like sending money to people constantly? Someone said online shopping. Streaming sites. We eat and then Uber Eats. So I'm gonna share a tip for shopping. I used to spend my whole paychecks on Uber, Uber Eats, and clothes. And one thing I will say is it is hard to sell things once you bought them. It took 2 seconds to buy them, but now when you're trying to sell them, it takes like a month. So what I do is I do seasonal shopping. So I'll do a major haul right before spring, summer, and then I'll do a major haul right before fall, winter. Yes, of course, I shop in between, but I do not buy nearly as much. And this helps me because I don't need clothes constantly. Like, I really, really don't. And honestly, neither do you. So try the seasonal shopping. Another trick too, when it comes to shopping, unsubscribe from those emails. Those emails are borderline harassment. You will get an email, 6 emails in a day after going on a website. Like, it's crazy. Unsubscribe. I unfollowed a lot of clothing pages on Instagram because I just don't want to be tempted. Like, I don't. Mind you, these are all things you can do to help, but if the mindset isn't changed, these things won't help. So I've done these things, but I also don't have the desire to shop constantly anymore, right? Streaming sites. Is Netflix a streaming site? Sorry, y'all, I don't have Netflix, so I don't really know what the vibe is for streaming. Okay, so, okay, cool. So you said sites plural. Listen, no judgment at all. At the end of the day, if these are things that you want to do, then eventually you'll have to create a budget for these things, right? Sometimes that means cutting back on other places, or you might even need to get an additional job to feed your streaming site fix, right? But again, differentiating between needs and wants is super, super important. Thank you all so much for the participation. We're gonna move on to the next part. So controlling your money is super important when it comes to taking control of your finances in general. You always want to be in control of your money. You do not want your money to control you. You might have heard this before, but money is simply a tool. We have the power and we direct it to where it needs to go. It does not, and it should not be the other way around, right? So one thing that helps me, and I suggest this to all my clients, is separate your money as much as possible. So typically your checking account is where money is coming in, money is going out, right? Then you probably have a savings account, which is for whatever savings goal you have. You should also have a TFSA, which is a tax-free savings account. So your money can grow a little bit, even though it doesn't grow that much. But separating your money, meaning I'm going to put my money in my savings. This is going to be my emergency fund. I'm going to also have money in my TFSA, and this is going to be maybe my vacation fund. And you're going to use these accounts to give your money purpose. If your money does not have a destination, you will spend it on garbage. Automate your bills. I was actually really against automating bills just because I did it from my phone and they literally charged me twice. And I was just like, this seems counterproductive. But as I've, furthered my entrepreneurship journey, I really don't have time to be making these payments like that. So automating your bills is also something that helps with time management, organization. So that's something you can try. Also too, with the money coming out, right? It automatically comes out and now you have to spend what is left. Skipping a couple points, pay yourself first, spend later. That's the concept there. Setting up automatic withdrawals for savings goals. So what you can do is you can call up your bank and say, listen, on the 15th of every month, I want you to take $100 from my checkings or my paycheck and put it into my TFSA or my savings. Again, the money is moved on payday. As soon as you get paid, it's transferred, and now you're spending with what you have left. We have to get into the habit of paying ourselves first. So taking care of what needs to be taken care of first, putting money towards our savings goals first, and then spending on things we don't need after. A lot of us are doing the opposite. We're spending, and then, oh, I should put $20 into my savings, but you don't have $20 anymore, right? Use a cash budget. I know maybe in these times, people don't want to touch money and whatever, but this is something that helped me in my first year of getting my finances together. I gave myself a cash budget when I used to go out and hang out with friends, and it worked wonders. Or what you can do is load money onto a prepaid spending card. So there's a Wealth Simple Cash card and there's a Coho card. And I actually have referral links there in the link on my Instagram. But this is the thing, right? If you sign up for these prepaid cards, we both get money. Then you get a referral link, you can send that to friends, and then y'all both get money. So this is literally a way to get free money, but also separate your money, right? These are not credit cards, they're simply prepaid spending cards. So you have to upload money in order to use them. They say Visa on them because they have to be Visa compatible to work with the machines. But if you don't have money on there, you can't use it. So just want to clarify. We already talked about understanding your needs and wants. And the last thing here, short-term satisfaction versus long-term comfort, right? We're so used to the short-term feelings of gratification. We want to feel good now. And most of the time we still feel like crap later, right? Like retail therapy feels good now to buy 2 pairs of shoes. And then later on, we're like, okay, well, this is like $200, could have paid my debt or could have went towards a savings goal. It's not worth it. And again, I want to say you can have fun and save and do all the things, but the priorities have to be there. So that was a mouthful. I'm going to pause for a second.
Hey, we did have a question from Claudia who asked,
yes.
Could you please repeat what automating your bills mean? Like setting it up beforehand, for example?
For sure. So basically with most bills, I guess I could say bills, there's usually an option where you can have them take the money out automatically on the same day every single month, instead of you going on the website, putting in your information and making the payment yourself. So for me, for my phone bill, what I did was I added my credit card as the form of payment, and on the 28th of every month, they charge my credit card the cost of my phone bill. So this is key for things where you don't want to forget to make payments, right? But also things where it's like you can't afford to be late either, because we don't want them late fees, right? So this is something you can do for your phone bill. I think like car insurance or whatever can be automated. Life insurance is automated. If y'all have any more examples, you can give them. But yeah, so it's just automatically withdrawing the money from your account instead of you having to make the payment yourself.
Thank you. And from JCC, do you have any tips about freelancers with a fluctuating monthly income? Currently, I'm managing my money by percentage. Once I get paid, specific percentages of my funds are allocated to specific accounts. So any tips about fluctuating monthly income?
So I've had a couple of clients who have the same situation where every month they don't receive the same amount of money. I typically don't follow like the percentage ratio when it comes to figuring out how much to save. However, if that's working for you, that's great. If you're talking about specifically saving money, it's tricky. And I'm sure you know that it's tricky. I can't think of anything honestly right now, other than it has to be a priority to either set up the automatic withdrawals as soon as you get paid, so that you're saving before you're spending. I think it'd be easier if we talk offline though, so I can actually see like numbers and expenses and that kind of thing. But automatic withdrawals are probably the easiest way when it comes to trying to save. Let's see. Automating saves time. So yeah, automating saves time. It doesn't save money unless the company has like a discount for setting up the automatic payments. It's just a time saver, and also organization, right? Like you'll never forget to pay because it's gonna come out of your account automatically. Okay, awesome. So let's see what is next. Okay, we're going to talk a little bit about banking 101 because a lot of people don't have any idea details about their bank account. And this is actually super important because you might have the wrong bank account and might not be doing what it needs to do, right? So what I'd love for you to do, homework, to-do list, is search up your bank account on the bank website, right? And read the details of the bank account. What does it offer? How much does it cost? What are the transfer fees and limits? Are there additional fees? Are there exceptions? Ask about monthly fees. This is just for TD, but I know other banks do it as well. With TD Bank, if you maintain $3,000 in your checkings every day of the month, you will get your fee refunded. If you have the the 25 transaction fee account, right? If you have the unlimited account and you maintain $4,000 every single day of the month, you will get the fee refunded. Let me know in the chat if you knew this, because I only found out when I literally saw a refund of my monthly fee and I was like, what is this? See, they don't tell you anything, right? They don't give you game. But that's okay. That's why I'm here. So there are ways that you can save money on bank fees. So please write this on your to-do list to go check this out right now. Typically people have checkings account, savings account, TFSA. Again, you want to separate your money as much as possible. I want to encourage y'all to dispute NSF fees, okay? Like when I wasn't even a student and I was saying that I was a student. I was like, I am a struggling student. Please reverse this fee. These fees were like $45, $50, $60. And I'm just like, whoa, like you're charging me because I don't have money. That's weird, but okay. So just try. Just say, hey, listen, you know, like I'm a student. I'm really trying my best. Like, can you do it? I never had a bank teller tell me no. Okay, free game. Another thing about banking, in the last, I don't know how many years, maybe 10, maybe 5, digital banks have been introduced, and it just means that there is no brick and mortar physical store for the bank. Typically, I'm pretty sure all digital banks do not charge monthly fees, and they usually have higher interest rates for their savings accounts. So look into digital banks if you are tired of paying fees, if you're tired of earning 0.01% on a savings account, and if you want to be offered more. I've been with TD for years. I just opened up a Tangerine account last February, and it's basically been a year, right, with Tangerine, and I've been offered way more than I've ever been offered with TD. And I've been with TD since I was 12. I'm going to be 30. Okay. Like, no explanation needed. So there's Tangerine, there's Simply, there's EQ, there's Modus. I think those are the ones that I know. If there's more, feel free to drop them in the chat, but take advantage. Digital banks are for the people, not the profit. And you can see that in the way they operate. Use a digital bank to hold your emergency fund. Remember I said separate your money. You don't want your big chunk of savings in the same account that you have your other stuff. This is something that I personally do, and I suggest to my clients: out of sight, out of mind. Different account, just different. Can't see it, won't touch it. Again, though, if your mindset is not where it needs to be, you're still going to just go into that other bank account, but it's a starting point. And build a good financial relationship with your bank to invite offers and perks, right? So you want to maintain good standings, all these kind of things, so that they'll offer you credit cards, lines of credit, all that fun stuff. But I want to say, you don't have to accept every offer. Not everything is for you, and that's okay. Oh yes, listen, student bank accounts, I'm always like, y'all are so lucky. But then as soon as you aren't a student anymore, they will slap that fee on that account for sure. Okay, so this is the end of the first segment. I feel like it took a minute. Any questions before I get into a quick overview of life insurance?
There was a question from Morda who asked, what are NSF fees? Or if you could explain it a bit more.
For sure. So non-sufficient funds. So if you are in the negatives, for example, and something is trying to be pulled out, like a bill is trying to be pulled out, you're going to get charged because you don't have any money. Or if you have $10 in your bank account, but your bill is 20, you don't have enough, you're going to probably get charged a fee for that. So again, that's a system flaw, like charging people who don't have money. Like, I can't make this stuff up. It's crazy. But yeah, non-sufficient funds. Now you can pay for overdraft protection, which means if you do get in the negatives, the bank will basically like cover that, the not surplus, deficit, but it's like $5 a month. So the end goal, I feel like that's more so like a Band-Aid solution. The end goal is to ensure that you're not going in the negative every month. Hopefully that answered the question. Is there a specific bank you suggest? So with Simply, actually, one of my best friends has it, and apparently you can't, there's something about it. It's either you can't like transfer money in some sort of way. So John, I would suggest you look into that before you get Simply, because she mentioned some sort of barrier when it comes to like sending money. So definitely check. I would say I'm not, listen, you all can do whatever you want. So disclaimer, this is just me. Tangerine has done a great job. Like, they'll randomly give me like $5 and I don't ask questions. So I've never had any issues with Tangerine. I have a checkings, a savings, a TFSA, a credit card and a line of credit with them, I have no issues. Do your own research though. I'm just going to read this last one and then we'll move on. Transfer fees. Okay, Warda, if you save your question to the credit and debt portion, that would be amazing because we're going to get into a little bit more of that. Okay, so I mentioned your financial house earlier, right? This is an image that I like to use when teaching people the importance of having a strong money mindset, but also having the right protection in place by the way of life insurance and critical illness to protect their family, themselves, their health, and their assets, right? So again, you don't want to start building a house with a shaky foundation. You don't want to think about furniture before you even build the frame. You want to start with a solid foundation. I know there's a lot of kind of negative connotation and confusion about life insurance. I'm going to break it down very, very simply. The first thing I'm going to say is it is not a one size fits all. That is the biggest misconception that people have. Two people should not have the exact same life insurance policy. It does not make sense. If they're different, if they have different needs, if they have different budgets, there's no reason why they should have the exact same coverage, right? So that's something that I want to put out there. And just continuing on with this image, investments is at the very top of the house for a very important reason. If you do not understand how money works, if you do not know what your monthly income, expenses, debt payments are, if you have not been taking care of your debt, if you don't have any sort of savings, you have no business respectfully investing. So baby steps, right? I'm not saying you can't do these things at the same time, but specifically when it comes to investing, it should not be a priority if you can't even save 20 bucks a month. Hopefully that makes sense, right? We want to make sure that we're building up a strong money mindset. We're taking care of our debt. We have these habits in place before we go and risk losing money. We're going to get into investing later on. So life insurance, it's a contract between you and an insurance company. In exchange for your monthly premium payments, the insurance company will pay a death benefit to your beneficiaries after your death. Beneficiaries can be parents, siblings, friend, children, spouse. This allows for your beneficiaries to take care of final expenses, funeral costs, and reduces the chances of your family going into debt. Everyone has seen GoFundMes. GoFundMe is the current day life insurance. And it shouldn't be, because A, if you understand the value and the benefits and the purpose of life insurance, you'll understand that it's an investment, but also you can't guarantee that people are going to donate money. And so if they don't donate money, like what is your backup plan, right? So it's all about understanding how it works so that you can implement it the right way. There are also policies that generate investments or cash value that can be used later on in life or to fund your children's education. A lot of people don't know this. They just think when I die, someone's going to get money. Well, no, you can actually set up a policy for your kids so that when they turn 20, they'll have money to go to school. So this is a cute little image. Shout out Napkin Finance. It's needed. Life insurance is needed at every stage of life when major changes happen. So let's say you have children, you want additional coverage for that. If you get into debt, you want to be able to take care of that so your family doesn't, have that burden. I want to mention that a lot of jobs offer life insurance, but it's usually a very small amount and there's usually stipulations. One of my clients said that her life insurance policy from her job was $40,000. That's I don't know, is that an average year's salary? As I've learned a lot about money, I've realized that a lot of these numbers really aren't a lot of money. Like $100,000 is actually not a lot of money. And then when you look in the real estate world, you start to realize that this is not a lot of money at all, right? Also, a lot of work policies have stipulations, like you have to pass away while on the job, and for your family to receive the money. If you have your own policy, it's with you wherever you go, and the stipulations are a lot less crazy as well. So in total, relieves your family of financial burden when you pass away. Some policies have investments. Easiest way to build generational wealth. You can also take out loans against your policy and leverage the debt to buy assets. We're going to get into that a little bit later when it comes to credit and debt, but debt is not all bad. It's how you use it. So you can take out loans, and if you use them properly, use them to buy assets that are going to make you even more money. Because guess what? The average person does not have $100,000 sitting in the bank. I would say the average person might not touch $500,000 in their whole life, right? So being able to access that kind of money and use it to build wealth is a major key. Okay, so the next, so just going through the 3 types. So this is, I'm gonna pause here because I'm an independent agent and I sell all types of insurance. So even health, even disability, all that fun stuff. I want you all to be aware of certain agents that only sell term insurance, and I'm gonna explain why. Term insurance is probably the easiest to sell because it's very, very inexpensive. There's a purpose for it, but I want you all to be mindful, okay? So you are simply renting term insurance. If you get a policy that has a coverage of $100,000 for 10 years, you only have it for 10 years. So if you don't renew it before or at the 10-year mark, you're not going to have insurance coverage anymore, right? So let's say you forget to renew or you decide not to renew. Well, year 11, you don't have coverage, so you pass away, nobody's getting anything. So just keep that in mind. It's available in 5, 10, 20-year terms. It's initially cost effective, but gets more expensive. So literally, I've seen policies for $18, $20, $26, $30, $40, pretty cheap on a monthly basis, right? Just keep in mind that when you renew for the next term, it's renewing at the age that you are at that time, and it's going to be more expensive at that time, right? Insurance is based on age and health. So if I get a term policy now at 30, if I'm trying to renew at 40, there's going to be a cost increase. The cost increase I've seen so far have been anywhere between 2 and 6 times the initial payment. This is something that's not explained. I've had clients tell me that they didn't know any of this, and it's just good to know all the facts before you get into something so you can make an informed decision. Again, term insurance has a purpose, right? Permanent insurance that lasts your whole life is more expensive because it lasts your whole life. So in order to reduce the cost, we will pair permanent insurance with term insurance, and that will reduce your monthly cost. So there is a purpose for it. I'm not against it. I just always want to explain to people how it's going to fare in terms of cost as they get older. It's good for short-term responsibilities. So if you're planning to pay off your debt in 10 years, maybe you'll get a 10-year term so that if you pass away in those 10 years, at least there's coverage for that debt. And of course, you probably want some term insurance for your kids, up until they're like 20, after they're not a minor or after they're not dependent on you anymore. So I would say like about 20 years makes sense for that, depending on their age. Does that make sense before I go on to the next type of insurance? Oh, I'm seeing some, okay, yeah, no problem. Again, like we have a lot of reservations when it comes to things we don't understand, and sometimes it stops us from asking questions, right? But it's very important to ask the questions, figure out what things are, and then you'll be able to make your decision. A lot of people think that just because they have an analysis appointment with me or they are curious about insurance is that I'm going to be ringing down their phone trying to get them to get a policy. My goal is to educate you, and if you feel like it's what you need, you will come to me. So please don't let previous experiences taint you from seeking the information that you want to seek, okay? So the next type of insurance is whole life insurance. This is a permanent policy. This has cash value investments growing inside. This type of policy is not very flexible. Most of the people, like most times, the people that get this kind of policy are older or children. Children, because you can set it up in the way to pay out like through school and stuff like that. Older, because there's not a lot of flexibility, and I'm not saying all older people don't, like flexibility, but they more so like the stability of this one. So when it comes to the investments growing inside of this type of policy, you are getting a guaranteed return, but that means that you do not get to choose which portfolio your money is being invested into. Some people do not care about that. Some people want the control though, so that wouldn't really be for them. But if you want the guaranteed returns, then this is something that you might want to look into. The cost is not transparent, meaning when it comes to the premium, you're paying for the premium of the insurance and the investments. So you need to overfund the policy to pay for the investments. But when we do the illustrations, you're just getting one cost. So you don't know how much the policy, you don't know how much the investments are. Again, some people don't care, but some people do. So in a nutshell, permanent policy has investments, cost isn't transparent, and you get the investment security, but you don't get to choose the portfolio. So I'm going to get into the last type of insurance. Yes, exactly. No question is stupid. I'll tell a quick story. So when I was younger, I was really horrible at math. Isn't this funny, right? I'm an advisor now, but I hated math, and my teachers were always like, you should know this. We already explained this. And I always told myself that when I became a teacher, and I have 8 years of teaching experience in and out of the province, mostly English, I said I would never, ever make a student feel like they couldn't ask questions or that their question was stupid. And as I've been, meeting with clients, a lot of the times they'll say like little things like, oh, this is probably a stupid question, or, oh, I know that's stupid, I know that's a stupid question. And it breaks my heart because it's not. The person who asked the question, 10 people were thinking that question that didn't have the guts to say it, right? So always ask questions. And if the person makes you feel bad for asking a question, they are not the right leader or mentor or teacher for you, period. So last type of insurance, last type of life insurance is universal insurance. So same thing like whole life. This is a permanent policy. This also has cash value. This is the most flexible though, because this type of policy offers premium holidays. So if you get sick or you want to travel for a couple of months, you can actually pause the premiums. The cost of insurance is transparent. So when I do the illustration for you, you're going to see, or you're going to be able to see how much the actual insurance costs and how much you need to overfund it to sustain the policy for the investments. With this, you get to choose your investment. So we do a, what is it called? Investor questionnaire, and you answer the questions based on your financial situation, and it gives you the portfolios that make sense for your investor style, right? So if you want to, if you're not risky, if you're very timid about, investing, you're probably considered conservative. And so it's going to take your responses and suggest conservative portfolios that you can invest in. So you do have the choice there. Universal insurance is the type of insurance that I actually have. And I overfund my policy probably by like $40 every month so that the investments can grow. So The next thing we're going to get into is critical illness. So critical illness is a rider or an addition. This is also known as a living benefit. So it's a lump sum check that provides additional coverage for medical emergencies like heart attack, stroke, cancer, et cetera, et cetera. This was actually developed by a doctor who noticed that these sort of medical illnesses were incurring a lot of medical costs, and he wanted somebody, or he wanted people to have access to money to take care of these costs. Because what happens when we don't have money to take care of emergencies? We use debt, right? So critical illness insurance pays out a lump sum, and you're able to use that to, you know, take care of monthly expenses. You know, no one actually checks what you use it for. So down payment on a house, anybody? So there's different types. You can set up your policy different ways, but there are 25 approved illnesses that are covered under this. Again, it helps with hospital bills, medication, unexpected costs. Some policies offer a return of premium. So if you are healthy and you think you're never going to get sick, you'll be able to recover the cost of premiums that you've been paying. And again, there's no restrictions on how you can use the money. So super, super important before we move on. Life insurance and critical illness is customizable. It is not one size fits all. These two things require an application. So you have to review and sign these documents before it gets submitted. So there's a process. It's not, you mentioned you want insurance, I'm now submitting something for you and you have no idea. There's a whole process, and there's a whole bunch of due diligence stuff that I have to go through. You can be approved, declined, or rated with exclusions. If you are declined for life insurance because of health issues, you can't reapply for 2 years. Life insurance and critical illness is approved based on your age, gender at birth, health, family health, and lifestyle. It is super important that if you are doing an application that you are honest, because guaranteed they're gonna find out if you lie. If you smoke and you said you didn't smoke, just know it might affect the chances of your family getting the payout, so just be honest. Life insurance and critical illness gets more expensive as you get older because risk increases with age typically. And there are companies used specifically for those who have a lot of health concerns. So if you do have a lot of health concerns, we're going to choose specific companies to increase your chances of getting the coverage and approval. Okay, I know that was a mouthful. I know that was a lot. Drop some gems if you have been learning a lot. Tell me how you feel about the things that you've learned so far. We have 2 more topics to go. I'm going to try really hard to get this done before 2. So let me know, drop some gems. Amazing. Thank you, everybody. Okay, so getting right into it. We got Bia. I wouldn't suggest doing this. This is not really sanitary, but I love this picture. So we're gonna get into credit, okay? Credit and debt. Again, what I mentioned earlier was that debt is not bad, it's how you use it. So again with the mindset, again with taking back control, again with believing that we have the power to make our own decisions, that we have the power to control our money. So I want us to understand that it's not that debt is bad, it's if we use it poorly or we rack up a lot of debt, that's when it can be detrimental to our finances. So credit, the ability of a customer to obtain goods and services before payment based on the trust that payment will be made in the future. Credit card is the best example. You can use a credit card and not have the money to pay it back, right? Of course, if you don't pay it back, you're going to be charged, but that's the idea. And we also live in a credit society where we don't have to have money to get a credit card. On the other side of the world, if you don't have $10,000 in cash, you're not getting a $10,000 loan. And I honestly rather that because of responsibility. And also it's like, yeah, if you don't have $10,000 in the bank, why do you think that you can get a $10,000 loan? And like, how are you paying that back? On the flip side, this is great when it comes to buying a house because most people don't have that money, right? But again, it's responsibility. We have to be able to be organized, be responsible. and make these payments, but also understand the details of these credit cards, these lines of credit before we get them. Because when things ruin our credit, right, that's when things get messy. Think of your credit report as your financial resume. The things on your resume are going to convince an employer to hire you. The things on your credit card are going to convince or deter a lender from giving you money. So good debt builds up your credit. Accounts are in good standing. You will most likely get pre-approved for credit cards and lines of credit. People will give you money if you have good credit, right? If you have debt and if you are maintaining that debt and you're making your payments, people will give you and offer you lots of money. Bad debt negatively affects your credit. This is missed payments, late payments, having a lot of high interest credit cards and missed payments, having a lot of high credit card balances and missed payments, or maxing out your cards, right? Our credit/debt behaviors are detrimental. So right now, if you're kind of wondering like, oh my God, I have a lot of debt and I don't really know what to do, please book an appointment with me. We will get you all sorted out. I have this in my Instagram profile, but so far I've helped clients pay off over $40,000 in debt, and that's just in the last year. One of my clients had over $80,000 of debt, and we were able to cut back like $8,000 in like a month because we created a plan. So let's not blindly be trying to take care of our debt here. Let's actually look at everything, see what it looks like, and create a plan to pay it off properly and also quickly, because that just means it frees up money to do other things like investing or saving for additional goals, right? Statistics Canada, coming with the facts. Y'all can read here. Average Canadian owes around $73,500 to banks. For each dollar they have, Canadians owe $1.72. And the average credit card debt in Canada stood at $3,330 at the time of writing in Q1 2021. Listen, if you have debt, it's okay. Most people do. Most people have debt, right? Some people have good debt and bad debt. Some people have good debt and some people have just bad debt. It's fine. This is not to alienate anybody who has debt. There is a solution. There's actually 8 different ways. Don't quote me, but I'm pretty sure there's 8 different ways to tackle your debt. So please, please, please stop ignoring it and start facing it so we can, come up with solutions. Okay, I'm going to get into, or I'm just going to share this definition here because a lot of people don't understand what an interest rate is, and you see interest rates everywhere. So it's important to understand what this is. Money charged for borrowing a loan, typically expressed as an annual percentage of the loan outstanding. Banks offer loans and charge interest so they can minimize losses if you miss a payment. So if you don't pay, you're getting charged interest, right? When it comes to savings and investments, you earn interest. And when it comes to debts, you are paying interest. So what we want to do is when it comes to savings and investments, you want the interest rate to be as high as possible. And when it comes to debt, you want it to be as low as possible. We don't like to pay debt out here. We don't like to pay interest out here. We don't like it. We want to earn it. Okay, so keep that in mind. Of course, with credit cards, you have to, adhere to the interest rates and stuff like that. But it's just important to know how to utilize these tools to get you ahead. Gonna pause here. Okay, awesome. I'm gonna share this formula, the rule of 72. So the rule of 72 is showing how long it's gonna take our money to double, right? This was coined by Albert Einstein. We don't really understand why we use the number 72. Throughout your financial journey, you're going to realize that we use things that were created by people that aren't even alive anymore. And we just have to operate within those systems because that's just how everybody does it. So this is going to show us how long it's going to take for our money to double. I'm going to show you this by the way of savings, and I'm going to show you this by the way of debt. It's going to be an eye opener. So please don't drink anything. I don't want you spitting anything out, and please be seated. Hopefully you're already seated, but this is a reality check. This is super, super important, okay? So average savings interest rate is 0.14%, okay? I was about to say poor because it is poor, it's horrible. 72 divided by 1. So 72 divided by the interest rate, that is the rule of 72 formula. It would take 72 years for your savings to double. If you had $1,000 in your savings, it would take 72 years for your $1,000 to turn into $2,000. Listen, I'm gonna be 30. We ain't got time, okay? So piggybacking off what I just said about interest rates, the goal is you want the savings account to have interest as high as possible, right? Typically, that's not going to happen because savings accounts really don't have high interest rates, right? The highest I've seen was probably like 2%. So what do? Now we got to look into investing, right? Again, another reality check. My savings account doesn't even earn the same amount of interest every single month. Scam alert, right? So let's say it did though, 97 cents times 12 months times 60 years. If anybody thinks that $698.40 is enough for me to retire, I don't know, drop the grandma emoji. If you think if you think that this is enough money for me to retire, drop the grandma emoji. I should see no emojis because this is ridiculous, but this is what's going to happen if you rely on your savings account to take you to retirement. There's no way, absolutely no way, right? So looking at this from a credit card perspective, average credit card interest rate is 20%. So if we did the exact same formula, it would only take 3.6 years for your debt to double. So again, they make it very hard for us to save and very easy for us to multiply our debt. So now that you know this, you need to actually, let's just get into the next exercise because this is perfect. You need to check your interest rate and see what you're earning on your savings account. And how to do this is look at your savings account, right? Click it, click the amount, and you're going to check for deposits that say interest credit. It's probably going to be 3 cents, 10 cents, nothing dramatic, right? I'd love for you to share what amounts you're seeing when you do this. And if you don't feel like doing it now, do it later and just see how much interest you're earning on your account. It's atrocious, right? The average interest, the average savings account, it's atrocious. It's not going to get you anywhere, right? Even on some bank websites, they'll literally say high interest savings account 0.05. And it's like, you're insulting my intelligence here because that's not going to do anything for me, right? I also want y'all to check your interest rate for your credit card. Not all credit cards have a 19 or 20 or 21% interest rate, but the average one does have 19%. I have one that's 14%. And also I want to say this, read the fine print. Read the fine print of credit cards before you sign for them, because guess what? There are credit cards that are charging 19%. And then if you miss the first payment, it's going to jump to 29% and you won't even know. You're just going to be like, why am I always getting charged? Like, and now you're missing payments, late fees. Like, you see how easy it is to get into the cycle of debt, right? So this is super important. You need to stay on top of your payments. You need to understand all the details of your credit cards and your lines of credit. You need to make sure you're reading those fine prints. I know it's boring, but trust me, it'll save you a lot of hassle in the long run. And if you have no idea what any of this is, please book an appointment so we can get you up to speed on all these things. 0.1, High interest, I laugh every time I see that. Exactly. So Musica, so I know for credit cards, they'll have the interest rate and then the, I don't know if all of them are called purchase rate or, I'm forgetting what the word is, but you're looking at the interest rate. So it should be on your statements. And this is basically what you're going to be charged if you miss a payment. Okay, right before we get into credit score stuff, does anybody have a question?
I think did we ever answer Warda's question about transfer fees?
So let me.
She's with TD and recently got a credit card and has a transferring payment of credit card from her debit.
So so you made a payment from your debit to your credit card and there was a fee for that?
No, my question is, I recently got a credit card and the way I pay, I guess, however I spend, whatever I spend, is by transferring my money from my Visa to my credit. Do I get transfer fees or no? Because I just heard you talk about transfer fees.
So the transfer fee I was talking about earlier was for like your bank account, right? So like sometimes if you want to transfer money to people, like an e-transfer, sometimes there's a fee for that.
Oh yes,
and
I do.
Sometimes, yeah, and sometimes there's no fee. Like for me, I have unlimited, it's fine. But some banks will charge a transfer fee if you transfer money from your account to another account. So that's what I was talking about.
Got it. Thank you.
But for you, you're saying you transfer money from your Visa to your credit.
Yes.
So Visa credit card to what credit?
I'm really new to this world, but
okay, no problem.
Yeah, so it's a Visa credit, so money from the Visa debit to the Visa credit.
Okay, so to pay off the credit card.
Yes.
Okay, so that's fine. There shouldn't be a fee for that though. So if you were charged that, that's something I would definitely look into your bank with, because you should be able to, like, your debit card money is your money, right? Visa just means that your card is capable to be used online. So if you're taking money from your debit, which is your hard-earned money, and you're making a payment to your credit card, there shouldn't be any fees for that. If there are, I would definitely dispute that with your bank. And if you have any additional questions, feel free to message me on Instagram as well. Okay, so let's get into credit score. So this is basically a summary of what your credit score means, and we're gonna get into checking your credit score too. You don't have to share it with me. I never ask clients to share their credit score with me. You actually shouldn't share your credit score with anybody unless they're asking for a specific reason. Some landlords might request, knowing your credit score, but this is not something you need to be sharing with people. However, it's good for you to know, because this is how you look to lenders, right? This is going to determine how responsible you are with money. So if you don't know your credit score already, you should definitely know it, and you should check it once a month. Understanding your score. So these are some areas you need to be familiar with. The biggest portion here is the payment history. Missing a payment is really bad. So you have to make sure you keep up to speed. Right now, I have 2 credit cards and 2 lines of credit. So you best believe I have alarms and calendar events set for when I need to make payments, right? You need to stay on top of these things. This is your responsibility. Amount you owe. A lot of people don't know this. You can only spend 30% of the amount you owe on a credit card. Doesn't matter if you have $300 limit, you can't spend the $300. A lot of people say, I max out my credit card, but I pay it back the next week. Your score is gonna get shot. Please, 30% of what you owe. I know it sucks, right? Like, I have a credit card, $6,000 limit, and I can only spend, what is that, $1,800? That kind of sucks, right? But these are the rules we have to follow in the game called credit. And if you don't follow them, your score is going to be impacted. Type of credit, you want diversity. I'm not saying go out there and get 20 different loans, but they like to see diversity, line of credit, credit card, car loan. Those things are going to help you if you are maintaining them properly. New credit card opened. So you don't want to keep applying for cards and loans and stuff like that. You really want them to offer you things, because if you apply for these things, it affects your score. But if they offer it to you, most likely they've done a credit check and it doesn't affect your score. Length of credit history. So typically you want to have, things for longer periods of time. So credit cards, you don't really want to close them. If you're going to close a credit card, you want to make sure that you have another account that has been open for the same amount of time or longer. Again, any more clarification for your specific situation, please slide in my DMs later. Let's see. Is it the 30% of each credit type or 30%? So it's, from what I know, it's 30% of each. So this is a trick now, right? If you want to be able to spend more, you really have to open up the amount of debt that you have, right? So I can spend 30% on my one credit card. I can spend 30% on my other credit card, right? If you only have one and it's a low limit, like my first credit card was $300. So I could only spend $90. But luckily for me, like I didn't really have the need to spend, so it works. But eventually you want to increase the amount of credit you have, right? Because the more good debts you have, the more you're able to leverage that to buy assets that are going to make you money. Okay, awesome. So, checking your score, again, once a month, at least once a month. You want to stay on top of the things that are being reported. You want to see what's, maybe you have things in collections. You need to know this. You need to know all these things. You can actually remove collection reporting off of your score or off of your report if you have proof of payment and all those kind of things. So you need to be on top of this. It's not something you can ignore. When you're ready to ask for money from the bank, they're gonna want to know what your score is. So if you, again, don't know what your score is, or it's not what you want it to be, please, 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 check it, but also book an appointment with me so we can get it up. It's not that hard to increase your score. Honestly, it's not. Quick tip. Make more than one payment per month. I don't know what it is, but they like it. Make more than one payment per month. Make 2, make 3, make 6, but make more than one. That's what helped me increase my score over 300 points in like 6 months. So again, results aren't guaranteed, but all the clients that have done this, it's worked for them. So it's worth it to try more payments, okay? Quickly here, who can use your credit score? Lenders, utility companies, potential landlords, and yes, even employers can actually request to see your score. I really don't like this. I think that's really fast, but it is what it is. You can check your own score as many times as you want. It's called a soft check. You do not have to pay to check your credit score. Borrowwell is free, Credit Karma is free. When any of these people check your credit score, it's typically a hard check, so it may impact your score. So please keep in mind of that. And then I'm pretty sure this is the last part for this section. These are some ways that you can improve your credit score, getting rid of negative information on your report. If anybody has a situation where they have something on the report, they've already paid it and they want to get it off, I may be able to help with that because I've had that situation happen like 2 times for me. So I may be able to help with that. Reduce your debt balances, pay on time, diversify your credit accounts, and have open active accounts in good standing. And again, making payments on time. Super, super important. I'm going to share this with you all because this is super, super dope. This is a payment calculator, okay? I'm actually going to put this in the link. I hope you all are able to like copy and paste that, but this is going to show how long it would take someone to pay off their debt if they had a $3,000 balance with $50 monthly payments. And the interest rate, we're going to do average interest rate of 19%. Take this in. This is real life. $50 is not enough to pay this off in a timely manner. 15 years for a credit card that you were probably using for clothes and shoes, it's not it. Okay, and look at the amount of interest you have to pay, right? That's definitely more than half. That's crazy. So I want to show you all something though, because this is what you all need to do if you have debt. If I just put this payment to $250, I could pay this off in just over a year instead of 15 years. And the thing about it is a lot of people have the money to make bigger debt payments, but they want to have $5,000 in their savings, or they want to be able to say they have $10,000 in their checking. Priorities, y'all, priorities. You have to make sure that the amount you're paying is over the minimum that they're asking, but that it makes sense for how quickly you want to make, you want to pay off your debt. A year is, a year just went by. Like, that's pretty reasonable. 15 years to pay off a credit card? Nah, you're just going to be in that hamster wheel, and we don't want that. So I copy and pasted this link into the chat. Please utilize it. And again, if you need specific help with your specific debt situation, let me know. Okay. Let's see. I'm going to quickly pause here. How strict is the time limit of ending at 2?
We can have more time if people are able to stay. How much longer do you think?
I feel like I could be done by 2:15. The next section is after this. This is only like 2 slides. The next section is about investing. So I just want to make sure we get through that part.
No, absolutely. Yeah, we can stay till 2:15. And everybody, if you're able to stay, I think investing would be definitely a nice way to tie everything together.
Okay, awesome. That credit card is full-blown 15-year-old teenager. I trust me. But you see, like so I want to say this. 2 years ago, I didn't know any of this stuff. So I'm very blessed to be able to educate everything that I learned, share with you, right? But also, like, all these things I've implemented into my life, right? Like, I have literally gone from 0 to 100. And it's just these different concepts and tools that I've learned and have implemented. So anybody can learn how to improve their finances when they have the right information, the tools, the mentor, and the implementation. So please utilize these resources, right? That link I just sent you, send it to your friends and be like, yo, like, y'all need to check and see how long, because people don't know. They're like, oh yeah, I'm making the $50 payment. I'm doing what they told me to do. Listen, for the most part, not for the most part, these systems are the enemy, okay? Like, these credit card companies are making so much money off of you. So of course they're gonna tell you $50, right? And you're gonna feel like it's doing something, and it is, but it's not doing enough. And so it's so important that you understand the impact of the payments you're making so that you can know whether to increase them or whatever the case is, okay? So Yeah, so Credit Karma, Credit Karma, I personally don't like it. I find it takes too long to update my score, and it's also not as accurate as Borrowwell, but it's free, and if it works for you, cool. What I always suggest people to do is get the free like 1 monthly quote from Equifax and compare. Borrowwell actually takes their score from Equifax as well. So as much as it's weird that you could have a different score on different platforms, another reason why these systems are so crazy and weird, but yeah, your score could be different on different platforms. That's weird. But whatever one is most accurate to Equifax, I'll say go with that one. But yeah, Credit Karma, Borrowwell are free. You know me, I like free, so you don't need to pay to check your score. I think that's absurd and another barrier to financial freedom and literacy. Anyways, I can go on forever. We're talking about emergency funds and savings accounts. These are two different things and should be utilized in two different ways. So the average person should have an emergency fund that covers 3 to 6 months of either income or expenses, so that if their income gets compromised, they're able to sustain their regular lifestyle, keep up with the regular monthly payments, keep up with debt payments without having to go into debt or use debt to make those payments. Your emergency fund should grow with your net worth, right? So you need to make sure you have enough of a safety net to handle the amount of expenses that you need paid, right? Savings account is also called a sinking fund. So this depletes once it's been used for its purpose. You can have multiple savings accounts, right? So if I want to shop, if I want to do Christmas shopping, I might save up, I don't know, $200 or $500. I had a sinking fund for my laptop that I bought last year. My birthday is gonna be soon, June's gonna be here in 2 seconds. So probably save up for that, right? And it's kind of like a revolving door. So as you use it, you're gonna save up for something else. But the emergency fund is supposed to be there for emergencies. Now, some people like to invest part of their emergency funds in different things. I'm personally like that because I have the financial capacity to do so, but you want to make sure that you always have a safety net or a base. And again, most people are like, well, nothing's ever going to happen. Listen, Corona's looking at all y'all like, okay, because if the last 2 years didn't show you anything, it should have showed you that you need to have an emergency fund. Examples of emergencies, because some people think that, what is it? Telfer bag release is an emergency. I'm sorry to break it to y'all. Much love, but no. Examples, wisdom teeth removal. Like wisdom teeth is hurting, you need to get it out ASAP. Last minute traveling due to family matter, last minute need for babysitter, pet sitter, car, home repairs, anything health related that you need to take care of. Those are emergencies. Please, again, when I separated the needs from the wants, this is the same thing. Y'all know what an emergency is, and y'all know what's not an emergency, okay? So please use your good judgment. Okay, we're gonna get into investing. I'm pretty sure a lot of y'all love to talk about investing and want to know the tea about investing. So I do offer an investing 101 session for those who want to learn how to prepare to invest, because a lot of the content that we're seeing online right now is intense when it comes to like crypto and all that stuff, but it's also it's in the thick of it, right? I'm not really seeing content that talks about making sure you have a financial cushion or a safety net, making sure that you you're not spending your last $500 on investing, not talking about the mindset that you need to be a great investor. And so that's what I like to focus on, because again, it's all about mindset. Doesn't matter how much money you have. If your mindset is not there, you may become broke again, okay? So let's get into it. Okay, so another disclaimer. Investing involves risk. Past performance doesn't guarantee future results. I'm not responsible for any financial losses incurred during your personal financial journey or your investing journey. Results aren't guaranteed. I always encourage you to do additional research. There are people who literally invest all day, every day. I'm the type of investor that likes to set it and forget it. So I'm more of a long-term investor. I'm actually, how do you say it? I can take on a lot of financial risk, but I choose not to. So I can be a risky investor if I really wanted to, but I'm not that type of investor. I don't have time to watch things all day. So that's not how I am. I'm a set it and forget it type of girl. That's just me. So super important, investing is expending money with the expectation of achieving a profit or material result by putting it into financial plans, shares, or property. It's one of the only ways to grow your money without working more. There's opportunity to gain profit, but you can also lose money. A lot of people don't know this. They just think, okay, I'm gonna invest. And this is why you have scammers out here saying, I'm gonna turn your $300 into $3,000. Come on now. Investing should be personal. Make decisions based on your goals and interests. Listen, everybody can invest, but not every investing opportunity is for you. Know yourself, please. It should be individual, right? Yes, I do encourage you to follow the wave with certain things, like certain things, if everybody's on it because it's a movement of the future, for example, the cryptocurrency space, but you still need to make sure you're making decisions that work for your financial capacity. Okay, so the goal in life is to earn more money without working more. There are only so many hours of labor you can trade for money. The only way to make your money work for you is if you invest. If you do not want to work more hours, if you don't want to take on another job, if you don't want to, if you're not able to get a raise, how are you able to make more money without doing more? Investing. So this is going to tie into what we talked about earlier. Average savings account earns 0.01%, right? In order to live a comfortable life, we need our money to outpace inflation. Inflation is the general increase in prices and fall in purchasing power. Right now, inflation is 4.7. So how is our 0.01% interest savings account helping? It's not, right? So we actually have to make our money earn 4.7% or higher in order to maintain purchasing power. Luckily, there's a lot of avenues that can earn that amount of interest. We just got to figure out what they are, right? On average, stock market earns about 8 to 10% annually. So that's a great way to invest. It's also, I would say, the most affordable and accessible way to invest. There are R.I.S.P investment accounts that earn 4% and up. You can also provide short-term loans to real estate investors and earn anywhere from 4 to 8% or more per term. Side note, if anybody does want to get involved in real estate investing and they're willing to provide a short-term loan, minimum $5,000. My brother is an investor, he's an angel investor, and that's what I've been doing for the past year. So if you want to get your feet wet in the real estate world, you want to get your feet wet in the way of investing, and you have the financial capital, message me and I will put you in contact with my brother. I know that was a mouthful. We're going to get into before you invest. Let me see what's happening. Okay, so some key things before you invest. 18 or older, parents can open up accounts for minors. Emergency fund, again, can't stress this enough. One of my friends was like, oh, I have 1,200 bucks. Should I invest that all in crypto? And I'm just like, girl, like, again, mindset, right? If your mindset is, I want to make fast money, please don't invest because emotionally, you're not ready, right? If you want to make fast cash, start a side hustle. Like, start braiding hair, paint and sell your paintings. I don't know, like sell some clothes and shoes you don't wear anymore, right? Like investing really and truly should be long term. Of course, there's short term, midterm, long term, but your mindset should be focused on the long term. Assess your risk. So again, your financial capacity is not the same as everybody else. So please, you know how people say act your wage? Act your financial capacity, like really and truly. Invest in a way that makes sense for your financial capacity, please. If you're already in debt, you really don't need to be getting into more debt in order to invest. That's just not the wave. And last but not least, tax-free. You want to invest through tax-free accounts. If you don't, you'll have to pay profits on your, you'll have to pay, taxes on your profits. You already know we pay taxes for everything, so ain't nobody got time for that. So tax-free is the way to go. So investments goals. The investment options that you choose should be tied to a financial goal that you have. And depending on what the goal is, you're going to choose that investment type, right? So you want to set short-term, midterm, and long-term goals, and then choose an investment type that will help you achieve it. So these are just some of the types of investments that you can invest in. If anybody has any other options, feel free to throw them in the chat. But there's quite a few, and you definitely want to diversify as much as possible. And I'm going to get into that in the next slide. Feel free to take a screenshot. For those who don't know, R.I.S.P. for children, R.I.S.P. anyone who identifies as having a disability is able to invest through that. From what I remember, the government matches up to three times their initial investment. Please don't quote me, but that's what I remember. R.I.S.P. retirement, first-time home buyer, lifelong learning. So there's a lot of different things going on there. If you want more information, hit me up. You can invest through your universal or whole life insurance, of course, like I mentioned earlier. And don't forget, I'm doing this backwards, sorry, y'all, but don't forget, you are your biggest investment. So please invest in those courses, those books, the laptop you need to start your side hustle, the DJ equipment that you need to start DJing events so you can make some money. Like, invest in yourself. It doesn't always have to be in other people or other things, right? You always want to pour back into yourself so that you can elevate. Yes, invest in yourself. Okay, so this is just a cute little screenshot of the things I've invested in so far. Most of my money is in real estate. Real estate and my emergency fund. I've invested in an R.I.S.P. My last job didn't have one because it was fairly new. So I opened up my own R.I.S.P. Yes, you can open up your own, right? Having one through work is great because they do, some of them have an employer match program where if you invest 20 bucks, they'll also invest 20 bucks. And now you're investing 40 bucks, which is great, but not all of them offer that. And some of them have stipulations where if you leave and all that kind of stuff, it can get messy. So I always suggest having your own insurance and having your own R.I.S.P., but that's just me. I've invested in stocks. I personally like dividend stocks, so stocks that pay out monthly or quarterly. And then I also like ETFs, which are baskets of stocks. So instead of investing in one, I invested in one that had 5. So I spend less and get more. Again, like all about the deals, y'all. I have a permanent life insurance policy. And so there's investments growing in there. And then I did recently invest in some gold coins. I was curious and I thought it was cool. And that's one thing that can maintain its purchasing power. Again, I went through this backwards, sorry, y'all, but again, diversify your portfolio. If one thing falls, chances are the other areas aren't falling as well. So you want to diversify so that you have the backup or the cushion, right? You don't want to put all your money into one thing. That's probably the worst thing you can do. So again, diversification is a way to minimize your risk. Government of Canada matches 20%. Amount for R.I.S.P. Yes. 500 annually going towards your child's study. Yes. I don't know all the details about R.S.Ps off the top of my head, but if you want more information, I am definitely able to get that for you. Can you repeat the type of stocks? So, so what I was saying was, for me personally, the types of stocks that I like to invest in, actually, you know what? I'm just going to show y'all. I'm going to show y'all because that's my my next slide. So just quickly here, a lot of people have questions when it comes to being Muslim and investing, right? I've had some people mention that people who follow the Islamic faith aren't allowed to earn interest, and so investing becomes tricky because they don't want to compromise, right? So this is something that I found. It's on the Wealthsimple website. So basically you can invest in companies that go through a specific process in which they do not, they are not involved in certain types of industries. So, you know, like no porn or alcohol, that kind of stuff. So if you have friends who follow this faith and they're interested in investing, send them over to Wealthsimple and tell them to check out the different portfolios specifically geared towards that. I thought that was very interesting and inclusive. So just wanted to point that out. And let's actually, I'm gonna show you what I meant. Becca, I'm going to show you what I meant with the different types. Okay, so this is Yahoo Finance. I use this to look at stocks and whatnot. I use Wealthsimple as my portfolio holder, my trading platform, but I'm using the free one because I don't want to pay. And so the time is delayed by 15 minutes. So what I do is I go on Yahoo Finance and I look up prices on here and everything, and then I'll go on Wealthsimple and I'll buy on Wealthsimple. So Wealthsimple is a Canadian trading platform. I would say it's super user friendly. I love it. I mean, they should pay me by now, but I love it. It's super simple, super easy to use. It's free, which is the key, but I do use Yahoo Finance. So what I was saying, Becca, was the type of investor I am, I like to set it and forget it. So I'm not a trader. I don't like to invest in things that are very volatile and that move a lot. I'm going to give you an example of two different types of stocks so that you can see what I mean. So for example, Apple, right? So Apple is one stock, right? You buy Apple, you get Apple, which is great. If you want to support Apple, that is cool. I also buy single stocks as well, right? I'll buy anywhere from 4 to 30 shares, depending on the price. But what I like to do and what I've been moving towards in the last couple of months, I like to buy ETFs. So exchange traded funds, also known as a basket fund, okay? I coined it myself, so don't come for me, y'all. But this is an example of a basket fund, okay? So this is a Canadian ETF, Vanguard FTSE Canada. And what I'm gonna do here is I'm gonna click on holdings. Holdings is gonna show me details about this particular fund. It's gonna show me the sectors that are included in here. But if I scroll down, it's also gonna show me what type of stocks are inside of this basket. So look here, we have Shopify, we have a couple Canadian banks, we have energy companies, right? We have railway companies. So I get a piece of all of these companies, but what? I only paid this much. I actually didn't. I paid less and more because I bought multiple times. But for $45.39, I get a bunch of stocks, right? Compared to if I went and I wanted to buy Shopify, look at the price of Shopify. That's somebody's rent right there, right? So that's what I mean. I personally have been buying more ETFs or basket funds than single stocks because I'm getting more bang for my buck. I'm getting more diversity. I'm getting more variety in the different types of companies and sectors, and I'm paying less. So this is not a suggestion, but if the math is mathing, you can pick up what I'm putting down. It makes the most sense for me because I can buy more of the VCE.to stock than I can buy of Shopify. There's no way I'm buying Shopify, but I will buy the other one and still get Shopify. So that's a bit of a trick, I guess. It's not really a trick. People know this, but that's what I do, especially if you don't have a big financial capacity to invest right now. You want to make the most of your dollar, right? Yeah, no problem. So how do you purchase that on Wealth Trade? I don't know if I have time to show you, but if you want to take it offline, send me a DM and I will help you out with that. One thing I will do is I'm just going to go back here, and I really want to emphasize this right here. When it comes to investing, right? Day to day, the stock market is going to change. We all know the stock market, like it was a whole thing, basically the last week. That's what it looks like day to day, all day, because it's supply and demand. But if you zoom out and look at the performance over the last 10, 20, 30 years, it's constantly increasing. So I want you all to view investing as not a day-to-day thing, but the long-term effects of constant investing is going to be a great reward, right? And this ties back into the emotion part, right? Like you looking at your portfolio every single day is not going to help you sleep. It's probably going to give you anxiety, right? So don't be so caught up in that. The numbers, the prices are going to change constantly. It's doing what it's doing. What I do is I like to check my portfolio maybe once a month. Again, I'm going to set it and forget it. I got things to do. I have clients to see. I can't be focused too much. So I want you all, again, take back the power and really trust in yourself, educate yourself, make those decisions to purchase certain stocks, and don't be so like, because that's when you're going to make bad investment decisions, is when you're emotional, right? So again, being emotional is fine. It's cool, but when it comes to investing, you just want to make sure that you are making decisions that are strictly business, right? Money is a tool. This is strictly business. I'm investing in something that's going to grow, and that's it. We can't be too caught up and attached to our money, but also the type of investment that we're making. So just to end off, just kind of quickly going through this, goal setting is super important. You need to make sure you're making smart goals. A lot of the times we kind of float through life with no direction, and goals really help solidify directions in different areas. So just an example, we want to save money, like that's too broad. Everybody wants to save money at this point. Everybody wants to save money. We need to put numbers. Obviously, I'm still in 2021, y'all. I didn't change the date, but everybody needs to add numbers to their goals, right? We need to be specific. I want to know the amount you want to save. I want to know when you want to save it by. I want to know how you're going to save it, right? We need the details. The details are going to, solidify your goal and keep you accountable, and also keep you interested, right? You also want to make sure you write down your goals as well. I think Erica Badu said, I don't know, she posted something. I don't know if she actually created the quote, but it was basically like, as soon as you write it down, it becomes real. There's power in writing things down with a pen, pencil, marker, whatever on paper. So please start doing that, right? Some books that I love, I'm currently reading Psychology of Money. I'm still reading it, y'all. I read more than one book at a time because I have so many I need to read. But I love this book because it goes through the lives of past / famous investors. I really love the messages that it has in this book. So check it out if you haven't read it already. Rich Dad, Poor Dad, most of you have already heard of it. The Lazy Millionaire, basically how to make money doing less work. That's everybody's goal, right? And honorable mentions, Persuasion and Rejection Proof. Rejection Proof changed my life. This guy literally goes around purposely trying to get people to reject him and say no. Like, I think that's just amazing. Rejection is not always a bad thing. Most of the time it's redirection or protection. So if you think of it that way, you'll be less hurt when you get rejected in different ways. Key takeaways: be honest about your reality, know your numbers, know yourself. Create balance between living in the moment and planning for your future. Learn about insurance, protect your income, your family, your assets. Your money needs a destination. Separate it as much as possible. Understand credit and learn how to manage your debt properly and make your money work for you. Start investing. So again, I know this was a lot, but if you have any additional questions, feel free to slide in my DMs, book an appointment. Financial analysis appointments are free, 99. Quickly before I end, actually, I'm doing an Instagram live tomorrow, Monday at 7 p.m. I'm actually going to be sharing what I've learned in my first year of business. I'm not a business coach. I'm an expert in my experience. I'm going to be sharing how I started marketing myself on Instagram, how I started building content, getting clients, monetizing my skills. I'm so excited to share because I can't believe again that it's been a year. Like, wake me up when September ends. But I'd love for y'all to tune in. So feel free, check it out on my page. You can set a reminder as well, 7 p.m. Eastern. And make sure you all follow me on Instagram. Send me an email if you have any questions. Book your appointments if you need help with your finances. And again, R.I.S E, thank you so much for the opportunity and the platform. You know I love what you all do. And may we continue to bring education and community together. And Black History Month, Black History Year, you already know. R.I.S E, boom. You already know. Energy up. I can't wait for whatever y'all are going to put together. I'm excited to be able to help the community in this way. I hope y'all see how excited I am about just being able to help you all build wealth. And again, thank you so much. I'm just, again, humbled that I was able to partner with you all. And shout out to everyone who contributed in the comments, in the chat. I love you all so much. Thank you.
Amazing.
Thank you.
Thank you. Thank you so much, Shay. Really, really grateful to have had you here and to take up some space and educate us when it comes to financial services and financial management. There's a lot of gems that were dropped in there. So I want to thank all of you for attending the Secure the Bag workshop. I just wanted to say that it's not over just yet. We just have a poll. Again, we want to take a moment to thank Lush for supporting this and putting this together. We just have a poll. Thank you so much, Jason. This poll is really going to help us to get more funding to continue giving you free programming. And so if you can take the time, it shouldn't take you any longer than a minute to answer these questions. If you're on a mobile device, you might see a green bar that comes across the screen. All you have to do is click the green bar and it will pop up and you will see the poll. So I'm going to ask you all to take just 2 minutes to answer these questions. The workshop isn't completely concluded yet. I do have some more announcements, you definitely want to know a little bit more about. And just a very quick thing as well too, this is going to end, and then we're going to start our second workshop of the day at 3 p.m., which is grant writing. These are the guys that actually got us the sponsorship for Lush and a lot of the funding that we've been getting over the last couple years. So I highly encourage you all to stay. But in the meantime, in between time, please take the time to fill out the poll, and we will commence or we'll wrap up shortly. Shay, check out the chat. There's a lot of positive messages for you in the chat, and I think it says a lot about your ability to share this information that can be so convoluted sometimes. But a lot of good messages in the chat. Just wanted to make sure you're aware, you know?
Thank you, everybody. I'm seeing some questions that didn't get answered. So please, if I didn't answer your question, just send me a DM and we'll continue the conversation there. Thank you. Thank you, thank you, thank you, thank you infinitely, forever. Thank you so much, everybody.
Amazing. We have 17 people that have completed the poll. Thank you to the 17. That means we have 9 of you left. So if you're in the midst of it, great. That's 18. We got 8 of you left. We really could use your responses. It really does help us inform how we go about applying for more work as well, or more money to do more work as well too. So I'm gonna give it another 30 seconds before we wrap up, and then just kind of close off this workshop. Yes, thank you. Abigail asked if there's going to be 1 second. Sorry, Abigail asked if there's going to be any replays. We are recording this. It's available on our YouTube, but if you want the actual video itself, we're recording it and we're saving it, and we can actually share it after. But again, we're live on YouTube. Hello, everybody that's on YouTube. But thanks for being here, and we'll make sure we get that out, Abigail. And go ahead, Shay.
Yes, I'm just going to add some links in the chat for anybody who wants to sign up for the Wealth Simple or Coho Cash Card I mentioned earlier, as well as Wealth Simple Trade. I have some links that you can earn some money and all that fun stuff through there. Again, you know, I like free things, so I'm passing that along. So check out the chat and tap in. Thank you.
Beautiful. We have 22 out of 26 individuals, about 84% of you that have participated. Again, for the other 4 who haven't been able to, we would really appreciate it if you could let us know. And that being said, I'm just going to move on and wrap up this workshop. Shay just put some links in the chat for you all to stay tuned and learn a little bit more about some of the opportunities and resources that she actually provided for you. So again, thank you all for attending the Secure the Bag workshop. And I want to make a very quick announcement that we've been doing a couple artist spotlights. We had an artist spotlight that happened on Friday night with Zen Soul. If you haven't seen it, I'm gonna highly recommend you go check it out on YouTube. It's a great performance. It was an incredible opportunity to see her deliver her gift, but also to answer some questions and for you to get to know a little bit more about Zen Soul. Up next at 2:30 in 8 minutes, we're gonna have another artist spotlight live and available for you to check out. This artist is an incredible artist. He was actually the winner of our Rise and Flow competition, one of the 4 that won. This artist is incredible. He's talented. He's really gifted at what he does. And I just wanted to read a little bit about him and his bio. You can see a great performance as he tells stories that are influenced by the songs. After the performance, you can go a little bit behind the music with Siddhartha as he answers some questions about himself, his experience as an artist, and how R.I.S.E programming has impacted and influenced his career, as well as the advice for up and coming artists. So Siddhartha, if you haven't heard about Siddhartha, I'm gonna just tell y'all right now, that boy right there can spit. He's got a real gift. He's got a real talent, a real ability to use his words and wordplay. And Siddhartha, Siddhartha is an Indo-Canadian artist, producer from Brampton, Ontario. He began pursuing music at 18 after his brother's passing, getting his diploma in audio engineering and production from Metalworks Institute. Hi, that's big. Metalworks is big. Within a year of his debut, he was selected out of 150 artists for Manifesto's Discovery Series, awarded the winner of the Rise and Flow competition, and through Rise opened up for Coffee and Juno Award-winning artist Toby during Manifesto's 2020 online festival. I love that we get the opportunity to do those initiatives for artists. His first project, Reflections of a Stranger, was sponsored by Ryerson University and the Gladstone Hotel. Alongside his many achievements, he taught music production and songwriting to the youth through Unity Charity and the Heart of Riverdale in Whitehorse, Yukon. Yes, the Yukon territories, the boy went out there to teach. His latest single, Six Buddha, has over 30,000 streams and has been featured in several publications, including Clash Magazine, FMS, and Music is for Lovers. So that is a little bit more about Siddhartha. As I mentioned, you can go over to our YouTube page. If one of my team members hasn't done it already, if you can put it in the chat, that would be really appreciated. And up next, we have our grant writing workshop with Emergent starting at 3 p.m. So be back here literally on this Zoom itself. And yeah, just tune in right back here at 3 o'clock and we'll continue the grant writing workshop. I highly recommend you all to come out. These guys are incredible. This team is incredible in terms of what they do and what they've been able to do for us as an organization as well too. So with that being said, we're gonna officially conclude this workshop. Gonna ask everyone if you're gonna ask everyone to just leave and join us back at 3 p.m. just so we can, just do some housekeeping for the next session. But thank you all so much. Shay, really appreciate you and all you were able to do. Please stay in touch with Shay. Get yourself an appointment, book yourself an appointment so you can learn a little bit more and continue the conversation. But on that note, I want to thank everybody, including my team and everyone behind the scenes to make this happen. We'll see you at 3 p.m. for our grant writing workshop.